Boulder is considering a significant financial move through ballot issue Ordinance 8711, which proposes increasing the city's debt by up to $262 million. This increase is intended to fund various capital improvement projects, including enhancements to roads, bike lanes, and public safety facilities, among others. The repayment of this debt, which could total $350 million including interest, hinges on the continuation of the community, culture, resilience, and safety sales and use tax of 0.3 cents. This tax extension is crucial as it would serve as the sole source for repaying the proposed debt. The initiative has sparked a debate among Boulder residents. Proponents argue that the debt increase is essential for addressing urgent infrastructure needs, which could enhance community resilience and safety. Conversely, opponents are concerned about the implications of increasing the city's debt and are advocating for alternative funding mechanisms. The outcome of this ballot measure could significantly impact Boulder's fiscal strategy and infrastructure development trajectory, depending on voter approval of both the debt increase and the tax extension.
Wipro Limited, NYSE, WIT, a prominent player in the information technology services sector, has experienced a notable shift in its shareholder composition. Natural Investments LLC has increased its stake in Wipro by 21.3% during the second quarter, holding 42,464 shares valued at $128,000. This move is part of a broader trend among institutional investors and hedge funds adjusting their positions in Wipro, as evidenced by several firms such as Hamilton Capital LLC and Cogent Blue Wealth Advisors LLC acquiring new stakes earlier this year. Despite these changes, institutional investors and hedge funds collectively own only 2.36% of Wipro's stock. In terms of financial performance, Wipro's stock opened at $2.68 with a market capitalization of $28.06 billion. The company maintains a price-to-earnings ratio of 17.29, reflecting its current valuation relative to earnings. Wipro's recent quarterly earnings report showed an EPS of 4 cents, meeting analyst expectations with revenue totaling $2.58 billion. However, analysts have given Wipro an average rating of reduce, with 4 holding a hold rating and 1 recommending a sell. Furthermore, Wipro's recent dividend payment, yielding 409.9%, suggests a significant payout ratio of 62.50%, which may be a point of interest for income-focused investors. The company's financial stability, marked by a net margin of 15.07% and a return on equity of 15.94%, positions it as a reliable entity in the competitive IT services industry.
Conning Inc. has reduced its holdings in Fortinet Inc., NASDAQ, FTNT by 4.1% during the second quarter, as indicated in their latest SEC Form 13F filing. This reduction involved the sale of 160 shares, leaving Conning Inc. with 3,756 shares valued at approximately $397,000. Concurrently, Fortinet, a prominent player in cybersecurity solutions, has seen significant insider trading activity, with CEO Ken Shea and VP Michael Shea selling substantial portions of their stock. These transactions, which occurred at an average price of $98.48 per share, resulted in a notable decrease in their ownership stakes, reflecting a potential shift in insider confidence. Fortinet's stock performance has been under scrutiny, with its shares opening at $83.06 recently, down from its 12-month high of $114.82. Despite a strong quarterly earnings report that exceeded expectations with an EPS of 64 cents, analysts have adjusted their ratings and target prices for the company. Scotiabank, JPMorgan Chase & Company, and Wells Fargo & Company have all lowered their price targets, citing market conditions and revised strategic outlooks. The market sentiment towards Fortinet remains mixed, with the stock receiving a consensus hold rating from analysts, reflecting cautious optimism amid evolving cybersecurity demands and competitive pressures in the tech sector.
Richardson Financial Services, Inc. has increased its stake in the JPMorgan BetaBuilders Japan ETF, BBJP, by 20.3% during the second quarter, as reported in its latest SEC filing. The firm now owns 1,317 shares valued at $81,000, following the acquisition of an additional 222 shares. This move is part of a broader trend among institutional investors, including Wealth Enhancement Advisory Services LLC and Gamma Investing LLC, who have also increased their holdings in BBJP. This ETF, which tracks a market cap-weighted index of Japanese large and mid-cap stocks, has seen a significant trading uptick, with shares opening at $64.74, reflecting a 21.3% increase. The JPMorgan BetaBuilders Japan ETF, with a market cap of $13.94 billion and a price-to-earnings ratio of 14.47, is gaining traction among investors seeking exposure to the Japanese market. The ETF's performance is notable, with its price moving from a one-year low of $49.03 to a high of $63.72. The fund's beta of 0.65 indicates lower volatility compared to the broader market, appealing to investors looking for stability. As institutional interest grows, the ETF's rising value could signal increased confidence in Japan's economic prospects, potentially influencing market sentiment and investment strategies focused on international diversification.
Natural Investments LLC has increased its stake in FactSet Research Systems Inc., NYSE, FDS, by 12.1% during the second quarter, as revealed in its latest 13F filing with the SEC. The firm now holds 850 shares valued at approximately $380,000. This move is part of a broader trend among institutional investors, with entities like Aberdeen Group plc and Strong Tower Advisory Services also increasing their holdings in FactSet. Institutional investors now own 91.24% of the company's stock, underscoring strong institutional confidence in the business services provider, despite recent stock price fluctuations. FactSet's recent financial performance has been mixed. The company reported quarterly earnings of $4.05 per share, slightly below analysts' expectations of $4.13. Revenue for the quarter was $596.90 million, surpassing consensus estimates of $593.32 million and marking a 6.2% increase year-over-year. Despite this revenue growth, the stock has faced pressure, with its price dropping to $282.99, down from a 12-month high of $499.87. Analysts have varied opinions on the stock, with a consensus rating of reduce and a target price of $356.78, reflecting cautious optimism amid ongoing market volatility.
Chipotle Mexican Grill, Inc., NYSE CMG, saw a reduction in stock holdings by Conning Inc., which decreased its position by 4% during the second quarter, according to recent disclosures with the Securities and Exchange Commission. Conning now holds 8,938 shares valued at approximately $502,000. This move comes amidst a broader pattern of institutional activity in Chipotle's stock, with Charles Schwab Investment Management Inc. increasing its stake by 5.8% in the first quarter, while other investors like Hilltop National Bank and Banco Santander S.A. have also adjusted their holdings. Institutional investors and hedge funds collectively own 91.30% of Chipotle's stock, highlighting significant interest from large-scale investors. Chipotle's financial performance remains robust, with its latest earnings report slightly surpassing analyst expectations. For the past quarter, Chipotle reported earnings per share EPS of 33 cents, just above the projected 32 cents, and a revenue increase of 3% year-over-year, totaling $3.06 billion. Despite these positive results, the company's stock has experienced volatility, with a current market capitalization of $53.45 billion and a P/E ratio of 35.59. Analysts maintain a generally favorable outlook on Chipotle, with a consensus rating of moderate buy and a price target of $58.93. Although recent adjustments in price objectives suggest some caution in the near term, the company's strategic focus on expanding its restaurant operations across multiple countries continues to drive its growth prospects.
Brewster Networks, Inc., NYSE has seen a modest reduction in holdings by Conning Inc., which sold 241 shares, representing a 3.5% decrease in its stake during the second quarter. Despite this, institutional investors continue to show strong interest, with hedge funds and other institutional investors owning 82.47% of the company's stock. This interest is reflected in the recent analyst activities, where several research firms have raised their target prices for Arista networks, indicating a generally positive outlook on the stock. Arista's stock has been rated as a moderate buy, with a consensus price target of $163.94, supported by robust quarterly earnings that exceeded analyst expectations, with a reported EPS of 73 cents against a forecast of 65 cents. Arista Networks has demonstrated strong financial performance, reporting a 30.4% increase in quarterly revenue year-over-year to $2.20 billion, surpassing the consensus estimate of $2.11 billion. The company's impressive return on equity of 31.05% and a net margin of 40.90% highlight its operational efficiency and profitability. Arista's market capitalization stands at $194.19 billion, with a P/E ratio of 60.77, reflecting investor confidence in its growth prospects in the competitive technology sector. The company's cloud networking solutions, including its extensible operating system, EOS, continue to drive its market position across various global regions. However, insider activity has shown significant stock sales, including a large transaction by CEO Jayshree Ullal, which may warrant attention regarding insider sentiment.
Amgen Inc., NASDAQ. AMGN has seen a significant reduction in holdings by Richardson Financial Services Inc., which slashed its position by 88.7% in the second quarter, as per the latest 13F filing with the Securities and Exchange Commission. This move leaves Richardson Financial with just 228 shares valued at $66,000, highlighting a broader trend among institutional investors and hedge funds who currently own 76.50% of Amgen's stock. Despite this reduction, Amgen's stock performance remains robust, with a recent quarterly earnings report showing a 9.4% year-over-year revenue increase to $9.18 billion and earnings per share, EPS, of $6.02, surpassing analysts' expectations of $5.28. In the analyst community, Amgen's stock has received mixed reviews, with Piper Sandler raising its price target to $342 and maintaining an overweight rating, while UBS Group adjusted its target to $317 with a neutral stance. The stock has an average rating of hold with a consensus target price of $309.42. Amgen's market capitalization stands at $156.19 billion, with a P/E ratio of 23.72 and a beta of 0.49, indicating lower volatility compared to the broader market. The company's strong financials are further supported by a quarterly dividend of $2.38 per share, yielding 3.3% annually, reflecting a payout ratio of 77.84%. Amgen continues to be a key player in the pharmaceutical industry, with a diverse portfolio of therapeutics including Enbrel, Otezla, and Prolia. The company's strategic focus on high-impact areas such as osteoporosis, cardiovascular diseases, and oncology positions it well for future growth. As Amgen sets its FY 2025 guidance at an EPS range of 20.200 to 21.300, analysts anticipate a full-year EPS of 20.62, underscoring the company's strong earnings trajectory. This financial outlook, coupled with its robust product lineup, suggests that Amgen remains a significant entity in the biopharmaceutical sector, poised for continued performance amidst market fluctuations.
CME Group Inc., NASDAQ, CME, has seen a significant increase in institutional investment, highlighted by Natural Investments LLC boosting its holdings by 29.8% during the second quarter. This move adds to a pattern of heightened interest in CME Group, as evidenced by substantial share acquisitions by firms like GQG Partners, LLC and Wellington Management Group, LLP in the first quarter. The financial services provider, which operates global contract markets for trading futures and options, reported robust earnings for the last quarter, with a 10.4% increase in revenue year-over-year, reaching $1.69 billion. The company's earnings per share, EPS, exceeded analyst expectations, indicating strong operational performance. Several equity analysts have adjusted their positions on CME Group, with Citigroup upgrading the stock to a buy and raising the price target to $300. Despite mixed analyst ratings, with 7 marking it as a buy, 7 as a hold, and 2 as a sell, the stock maintains a consensus hold rating and an average target price of $281. CME Group's stock performance remains stable, with a current market capitalization of $97.83 billion and a price-to-earnings ratio of 26.28, reflecting investor confidence in its consistent dividend payouts and solid financial metrics. The increased institutional interest and positive earnings report suggest a favorable outlook for CME Group, potentially driving further investment and supporting its stock price. The company's strategic position in the financial services sector, offering diverse futures and options products, positions it well to capitalize on market volatility and the continued demand for hedging and risk management solutions.
Sempra Energy NYSE SRE has seen a slight reduction in holdings by Conning Inc., which sold 126 shares, representing a 3.2% decrease in its position during the second quarter. Despite this minor divestment, institutional investors continue to show strong interest in Sempra, with firms like Jacobi Capital Management, Murray Asset Global ETFS Holdings, and Goldman Sachs significantly increasing their stakes. Sempra Energy, a major utilities provider, reported a quarterly earnings per share of 89 cents, surpassing analysts' expectations of 82 cents, though its revenue of $3 billion fell short of the projected $3.35 billion, marking a slight year-over-year decline. The company maintains a robust market presence with a market cap of $58.82 billion and a price-to-earnings ratio of 21.78. Analysts have mixed views on the stock, with ratings ranging from hold to outperform and price targets varying from $80 to $105. Sempra's recent dividend declaration of $0.645 per share, yielding 2.9%, underscores its commitment to returning value to shareholders. The company's strategic focus on energy infrastructure, particularly through its Sempra California and Sempra Texas utility segments, positions it well in the evolving energy market landscape. Despite the insider sales by executives, institutional ownership remains high at 89.65%, reflecting continued confidence in Sempra's long-term prospects.